Welcome back to Dre's Take, folks. This week, Florida homeowners insurance pressure continues after Nicole. Luckily, despite the destruction that Nicole wreaked on the east coast of Florida, the damages luckily won't be as significant as what we've seen in previous storms. Hurricane Ian racked up about $8.7 billion in losses for the insurers in the state, which we've still yet to see the total fallout from. And before we were even able to get our feet under us, Nicole came along and caused more devastation. Luckily, the losses from Nicole are only about $750 million to this point, but any additional losses to the state's insurers at this point is just icing on the cake. As a brief recap, many Florida homeowners and would-be buyers have been struggling to keep up with the rise in insurance premiums as homeowners insurance companies have went insolvent, filed for bankruptcy, or left the state altogether amidst mounting losses from previous storms and rampant fraudulent claims. Now, back in May, Governor Ron DeSantis and the Florida State Legislature met in a special session to try to address some of these issues around the insurance market. And at the time, they had allocated about $2 billion to the reinsurance programs, which is essentially insurance for the insurance companies. However, $2 billion is a far cry from the $8.7 billion in losses from Ian alone, so that doesn't quite do it. So what happens next? Well, the state legislature is slated to hold another special session here in December and hopefully make some adjustments, probably allotting more funding to the reinsurance market and hopefully stabilizing pricing and premiums, making it more attractive for some of those insurers to come back to the state or lower their premiums some as they feel some of their risk has been mitigated. Now, State Rep Paul Renner of Palm Coast doesn't really see a whole lot happening as far as rates moving backwards in the very near future, but it is his hopes that we'll at least see some price stability and that the actions taken in the December special session and moving forward will have an impact down the road. Maybe in following years, we'll see some of those premiums start to come down. I really hope they do something about this. I'm not looking forward to seeing my renewal letter this year. Last year was quite a sticker shock as my homeowner's insurance tripled at the time, and I had to do some pretty extensive shopping to find a decent policy. So it's not something that I'm looking forward to come January when my policy is due for renewal. So let's hope this special session in December yields some good results and some good news for the insurers, and they can take the pressure off of the backs of Floridians, both homeowners and would-be homeowners alike. In other news, there was the NAR convention, National Association of Realtors convention this past week, and there was some noteworthy comments made by Chief Economist Lawrence Yun, kind of piggybacking on what I had said in last week's video about inventory being so dramatically low that despite the recent pullback in demand, we're still not seeing home values fall off a cliff because that gap was so dramatic between supply and demand to begin with. It's always nice when I go and put together my own ideas around this stuff and come to the table with my conclusions, and then a week or so later I get an article from a highly credentialed economist that kind of validate the things that I've said in previous videos. That's always nice. Give me a little extra boost and pat on the back to know that I really know what I'm doing here, and I'm not alone in my thought processes. I'll link both articles in my weekly email, obviously, and in this video if you're interested. Go ahead and take a look at that. Until next time, that's Dre's Take. Take care, y'all.